Welcome in traders. In this video, we're going to go over today's trading session. We are currently looking at ES and the time frame we are using is the 2000 tick chart. Now the only supportive indicator I use is the 21 EMA, which is this purple line oscillating in between the candlesticks. And other than that, I solely rely on price action to look for high probability setups. Now the first thing I like to do in the pre-market session is to identify the key level resistance and support. This is the resistance, this purple line, and the support right over here. Now, these levels are important because as price action develops, we want to see the reaction we get once they reach that level. Or we can turn into a range, which is the setup that started off this morning. As you can see, price is contained in between this resistance and the support. And an analogy I like to use is it's like a ping pong game bouncing from one point to the other. Now, coming to where the bell rang, we started off with a nice bullish trend working higher. Initially, I had it drawn tighter, something like this. But as we pushed higher with a series of higher highs and higher lows, holding above the EMA, I geometrically aligned the trend line to form something like this. The more pivots you get, confirmations, the better. We have about 1, 2, 3 pivot confirmations, which definitely confirms this uptrend. So now we are only looking for long setups. Now, the first setup that I had was right around here. And what we are doing is we are looking for long entries and we're going to start counting entries, right? We also have to respect the short and downtrends because you want to make sure the short and downtrends play out before looking for long opportunities. Now, using my counting technique, counting from this recent high, we have a new high, first entry long. This is the first attempt for bulls to try and go long, right? It's the first trigger higher than the previous candle. Then we had a pullback. Now, this second entry long was hidden because this red bar here initially was the trigger bar. We ended up opening on the next one, triggering higher, right? So that triggered the second entry long. Then we pulled back and it was a hidden higher low, and then we pushed higher. Now, as you can see, we are strongly holding above the EMA. This is a very strong bullish bar, a nice reclaim, and I ended up putting a nice limit order as soon as we triggered above this bar. Once I entered, my target profit was this recent high pivot, which we got that and more. If we measure, it was about a 5.5, 6 point move. So now that we got that trade out of the way, we can still focus and look to take long setups because this trend line is still active. The only time it's not active is once we break below it and then we make a new high. This is when we pause looking to go long and we can wait for the next market cycle. So there was no setups over here. We had a new high, first entry long. This second entry long over here didn't even trigger. Guys, remember, before you enter, you need a trigger higher than the signal bar before you enter. We didn't have that here, and we ended up pushing higher and higher. Over here, I was looking to enter, but we never had the first entry. Counting from this high over here, we have a new high. We never had a bar that triggered higher than the previous one. So this is only a first entry, a couple first entries over here as well. So we are looking for high probability setups, which are either second entry longs or a higher low confirmation of it. We ended up pushing higher, and this is where the correction got a little bit stronger. No setups here. So this downtrend, we have to wait for it to completely play out before we go ahead and look to take long opportunities, right? So this downtrend ended up playing out with a break and a new low. Once this happens, it wasn't too big of a correction, so you can look for a higher low above EMA. We never got that, and we got one more rejection, which is totally normal. Sometimes the bears want to go for an extra push lower, and sometimes the market likes moving in pairs of twos. So if we get rid of this and we measure, it looks like we have one leg here, and if you measure this over here, it looks like a second leg, right? And even if you had this drawn even a little bit wider, you're still going to get a break and a new low. So now the bearish correction has played out. And since it was a bit stronger, I rather look for a reversal pattern above the EMA than a higher low alone, just because whenever it's longer, you just want extra confirmations before taking that long. So counting from this recent low, we have a new low, first entry short that failed. and we're looking for a second entry or a failed second entry short above the EMA. We never had it. And this happens, pretty often where bulls just kind of have a strong reclaim, you get engulfments, and it just sliced through the EMA and it broke. And we didn't necessarily make a new high, we got close to it. So I was still looking for long opportunities because if we zoom out, this big uptrend still didn't get a new extreme, right? The high of this uptrend is about 42.75, and over here we got 39.75, 739.75. So we're still a couple points short, especially because it was a strong uptrend, approximately 36 points. So we are still anticipating for this uptrend to make a new high. But usually when we get close to it, you want to be a little bit more cautious before jumping the gun and looking to go long. So you want to make sure the bearish corrections play out before looking for long entries. This downtrend had a break. We had a new low over here. And what I was initially looking for was a higher low. Something like this triggers lower than the previous candle, trapping all the bears. We never had it. Similar situation like we had here where the bulls just kind of sliced through, momentum picked up, and now we have a break and a new high for this uptrend. So far out of these moves, we only had really one good high probability setup, which is usually more than enough. But if you were still looking for some, right after the lunch break, you can look for more high probability setups. We now had a very strong downtrend working lower. Um, and as you can see, it's pretty seamless. We never even broke above the EMA, very clean price action. And once we draw this, you can see price broke below this lower trend line, right? Now, once you see this, this is called overshoot. An overshoot means this level is oversold. We don't need an RSI indicator to tell us that an area is being oversold. A trend line alone can show us that, right? So once this happens, you want to be a little bit more cautious. If you can draw the corrections wider. You don't want to draw it like this because it just geometrically doesn't align. But in a scenario where you can draw it wider slightly, you can. But as you can see here, we have one leg, second leg. And as I always say, the market moves in pairs of twos. So now the correction played out. The bulls had their break and a new high. And now price is going sideways at the EMA. Now, I was initially looking for a lower high confirmation candle. So for instance, this green candle here, if it ended up closing red and just a bit more of a stronger close, I would have took it for a short. But as you can see, price is kind of in the middle of the EMA, stacked, a lot of overlapping. So when this happens, you don't really want to take a setup unless it's a strong signal bar. We never had that, and we have a break and a new low here. So now this big downtrend ended up playing out. We had a break and a new low. And now what are we expecting? Well, we're expecting for price to trade higher, right? So the ultimate setup when you're looking to reverse is a failed second entry short, which counting from this recent low, we have a new low, first attempt for bears to short that failed, pull back, and this is the second attempt for bears to short and they failed. Bears get trapped here. This is another great setup, very strong signal bar. This is the second trade that I took for today, and it was a great scalp, approximately 4.5 points if you held. And this uptrend ended up breaking, touching the EMA and having a new high here. It was a small pullback, but it was enough for the bulls to count it as a new high. A little bit of a consolidation here and more pushing higher, right? We have price pushing a bit more higher. Now, this was getting close to market close, and I like to avoid at least 25 minutes before market close, but I was eyeing a potential, and let's actually get rid of some of this stuff just so it's a little bit more clear. And I was eyeing a wider uptrend, something like this. You can cut corners a bit, doesn't have to be perfect, it just has to be close. So I ended up drawing a spike in a channel. Let's fix this, make it look a little bit more better. Drop this here and something like that. Let's get rid of this. Okay. And let's copy that and put it here. All right. So as you can see, it fits great. It aligns with the EMA. We have two pivot points over here confirming this uptrend. And now we are potentially looking for a second entry long, right? Because now this uptrend needs a new high, a new extreme. Now, This was right before close, I think about a couple minutes before it. So, it's a little bit more risky. The market gets a little bit more volatile. So it's not an area where you want to trade. And that was it for today. And the market closed. So two good setups today, a little bit slow price action, which is, something you would expect during August. It's a bit slow season. And once everyone comes back from vacation, institutions get fired back up, the market will gain momentum. So two good trades today. We had the second entry long for this uptrend. And then second trade we took was this reversal pattern over here, a failed second entry short. We're reversing, anticipating for price to push higher after this downtrend had a break in a new low. So that is it for today, guys, and I'll see you in the next video. Take care.